Our latest Natgen investment trust is Natgen Investment Trust QC24, which consists of 2 office assets within regional locations in Queensland. In choosing assets for QC24, we looked at areas of Queensland that have similar attributes in terms of office locality and utilisation. So one of those assets is in Helensvale on the Gold Coast, adjacent to the M1 motorway, and the second asset is in Lake Street, Cairns in far north Queensland, which is basically the main street of Cairns. These 2 assets go together well in a portfolio because of the diversification benefits they offer. They're both commercial office assets, of course. However, we have a diversification benefit of differing locations and also different tenants, whilst maintaining the value of both being purchased under replacement cost and probably significantly so. Whilst Cairns and the Gold Coast seem a long way apart, those 2 commercial office assets exhibit complementary and diversification benefits within both their tenancy mix and also their location. We've been able to acquire these assets such that their targeted distribution for unit holders will be 9% per annum, and possibly a little bit above that as well, based on current rents. And as always, the rental profile of the properties is such that rents will continue to grow over time in accordance with the leases. We've been focusing on Queensland for commercial assets because of the attributes that the state has. Certainly population growth is very important in terms of commercial value growth over time, and Queensland has been very resilient in terms of population growth, both before and of course during the COVID years and since. An aspect that goes to population growth is also infrastructure growth, and these are both areas of Queensland which have significant growth in infrastructure spending, particularly on the Gold Coast with the building of the Coomera Connector, which is basically the second M1 motorway. The asset on the Gold Coast there at Helensvale is actually between the current M1 and the new Coomera Connector. Now, being adjacent to the M1 as it is, it's actually exposed to about 170,000 car movements per day. And in Cairns, the Lake Street property is basically just around the corner from the Bruce Highway, which runs also through Cairns. It has about 117,000 car movements per day. So they're both very high trafficked areas and high volume of commercial activity in the areas. Both the assets accord with the Natgen investment themes which we have stated over the past couple of years, that being regional convenience retail, non-capital CBD office assets, value-added industrial and development. So obviously these are the non-capital CBD office assets. As always, when we're looking for new assets for our investment trusts, we seek unique opportunities in areas where we see long-term value. And in this case, we see non-capital city CBD office markets as remaining strong when in fact office markets have been criticised having high vacancy rates, particularly due to issues such as work at home and these sort of issues which have come about in the post-COVID commercial world. So whilst work at home is a major issue in CBDs in terms of office space utilisation, the indication is that regional offices have maintained their levels of occupancy even within the work from home environment. The important aspect here in regional offices also is that building costs have risen precipitously in the last couple of years. That means that we're now able to buy good quality office buildings for significantly less than their replacement cost. That means that as office occupancy grows, we have assets which compete in that market and are able to show significant rental increases over time. We're also looking at markets which have very low vacancy at the moment. So if you talk to commercial real estate agents on the Gold Coast, they'll tell you that the Gold Coast is virtually full in terms of offers. Whilst there's a couple of percent there of vacancy, it's basically full. So finding new office space is very difficult, and of course that's pushing rents up over time, particularly in this environment where it's not easy or cost effective to build any new space. Very tight vacancy factor going forwards for quite some time. Investing in a Natgen trust gives you access to three types of return. One is the income, which is distributed monthly from the assets. Secondly is taxation benefits that come through investing in commercial property and income producing property. And thirdly is the potential for capital growth over time, which comes from investing in commercial property assets. Capital growth is an important opportunity in investment, and it's one which you don't get when you when you put your money in the bank, for example. When you put $1 in the bank, you only ever expect to get $1 back out of the bank with some interest on the way through. And by the way, the interest that you get in the bank has no taxation benefit. You just pay full tax on whatever interest you get. Over time, we've certainly seen that commercial property grows in value in the medium to long term. There are often some short-term fluctuations in value, like with most investments, but in the long term, values should grow. And one other aspect that's clear in this case is that given the increase in construction prices in the last 2 to 3 years, is that these buildings could not be replaced for anything like what we're purchasing them for. So there's a significant growth in value of these assets before that anything competitive can be built. The term of Natgen Investment Trust QC24 is a 5 to 6 year term. Basically that means that we'll run the trust for 5 years, and after the 5-year mark, Natgen will act to sell the property. Once the property is sold, proceeds of the sale will be used to pay back the debt on the property and then to return the capital to investors. So any surplus in the money required to return the debt is capital growth for investors. The debt facility will be provided by a Big Four Australian bank. We are still in discussions with a number of banks, as we always do, and we manage the debt facility both at the initial time and through the term of the trust. We also take a conservative approach to interest rate management, and we've allowed for a blended interest rate over the term of the trust, which is indicative of what we're seeing in terms of forward interest rates going forward for that 5 to 6 year period. It is possible that we could use interest rate management tools such as fixing a rate or having a cap and a collar on the interest rate. But in fact, at this time, we're likely to leave the rate floating as the risk of interest rates is tending towards the downside in the future. Diversification is an important factor in the Natgen investment philosophy, and in this case diversification comes from having a number of tenants in each property in different sort of fields. They're all office tenants, but different types of tenants, and also diversification across regions. So the idea is that with diversification is when one area is performing well, the other area might be able to be supported by that, and vice versa. So in this case, the major tenant in Cairns is the Commonwealth Bank. They're in there for a 3.5 year term, and then they've got 2 3-year options thereafter. They've been in the building for over 30 years and actually built the building initially and sold it off during that time. So it's their flagship branch in Cairns. Cairns is a city of around 170,000 people and is basically the largest city in far north Queensland. The anchor tenant of the Helensvale building at the Gold Coast is Alder Constructions, which is a construction and property development group focusing mainly on commercial assets and infrastructure style construction. As always, our due diligence investigations relate to both the assets themselves and also the tenants. So we check the financial veracity of the major tenants, and also we check the value of the assets. We look at technical due diligence, which looks at the structure of the properties, basically how they've been built. We look at any maintenance issues that are likely to come up in the future. We look at the mechanical and electrical aspects of the building, such as lifts and air conditioning and heating systems, and how they've been maintained. We also look at the location of the assets on the sites to make sure that's all correct. Basically, we've got a large due diligence manual. The Natgen due diligence manual lists pages and pages of checks which we need to do on all aspects of a transaction before we go ahead. This includes things like legal searches too, of course. So we check for contamination of the site, we check for flooding, of course. We check that all the appropriate town planning permits have been achieved on the site, and all those other issues which you have to look for. So, for example, if you think about what you do when you buy a house, you do your buildings, you do your searches through your solicitor. Well, you do about 10 times as many similar things when you're doing due diligence on a commercial building such as this, because we have to make sure that it's in a state where it is legally compliant both now and in the future. Natgen takes an active management style to the way we deal with the assets within our trusts. That's one of the particular values of commercial property for a fund manager, is that by managing it well, we can actually impact the value of the property, which isn't quite so obvious. For example, if you're a manager of a share fund, there's nothing you can do about the value of the companies which you're investing in. But in this case, we can actually ensure that we maintain the values of the properties for unit holders. So I'd like to commend Natgen Investment Trust QC24 for your consideration. As always, we've put a lot of effort into putting this offer together. We're very keen to hear your thoughts and get your feedback on what you think. Thanks very much.